Hey, good morning, everybody. Welcome to another day of Mark Report brought to you by Mike Bjork. Today is Monday, August 18th. Hope you guys had a wonderful weekend here. Uh, one economic news release today, and that's the Home Builders Index. This is basically the confidence level for the home builders out there, and as you can see, so back in July we had a 53 on the rating, and it actually jumped up to 55. So they're feeling a little bit more confident. Where homes are moving and could be building more homes, so that could lead to more jobs. So this is good news. Uh, so jump over to headline news. We got the stock markets up. They pretty much recovered. They're kind of recovering from last week as we had a huge drop on Friday due to political concerns. Over the week, and those geopolitical concerns waned a bit. So now the stock market is kind of, basically got into overbought or oversold position. Now they're kind of stocking back up a little bit. So it's back on. So we had good numbers on the home builders index as well as the geopolitical concerns between Russia and Ukraine subsided a little bit with the convoy to Kurdish taking more control in Iraq versus the ISIS. So we got a little bit of news right there and make investors feel a little bit more comfortable where things are at. So we'll take a look at the bond market. And as a result, it pulled money out of the bond market back into the stock market. So the good news is stock market rejoiced, but pullback on the bond market is basically creating a little bit higher interest rates today. So we pulled back a bit on the interest rates. As you can see, a pretty big spike. Remember, this is been a pretty tough resistance as we really haven't really cracked this. Anytime we go up this high, it's pulled right back. We haven't really sustained any levels above basically in this trade line. If you can kind of see here, if you match up a line, you're basically right in here. Anytime we've gone up, we pulled right back. So like here, we went up slightly, but we didn't keep it and pulled back. And here we had a pretty big sharp one, but again, it pulled back right away. It didn't sustain itself, and we're right back down this level. So be careful because it could easily drop down to this level and worsen a bit more as we've seen quite a bit of these. It hasn't always stayed on the higher levels. Um, so if it does, obviously, the further down it goes here, it means the higher interest rates climb up. So um, it doesn't mean it's a huge spike. It's not going to drop like 1% or anything, but the pricing gets a little bit worse. All right, folks. I hope you guys have a good rest of your day. We'll have more economic news this week, but they did creep up a little bit from where we left off on Friday. All right, have a wonderful day. Thanks again for watching, and see you tomorrow.